Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 9th, 2025. Hope you guys are having a fantastic weekend, and let's get started. So I'm going to go over a bunch of stuff today. First thing is we're going to go over the morning notes, and if you guys have been following them, you've been doing pretty good. It's been pretty spot on with each move up and down, and we definitely have been taking advantage of it, and we took advantage of it on Friday again. And I'm going to show you the trades that I put out into there was only one trade that I put out into the trading room, and then to go over what I see playing out this week, and then how we did overall for Friday. So in the morning notes, I said if my game plan remains the same, continue building a long position at key support levels. 56.90, 56.65, 56.35. So let's take a look and see where we closed at. And the low of the day was 56.66. So that's pretty damn close to where we were looking at the 56.65. So that played out, and then I said if the bulls need to clear the 57.53 to cause a reaction trade up to the 57.85. So if we go back, take a look, and we are got to go the other way. I have all these. Okay, so here we go. So here's where actually I think I have it on. Okay, this is it. Nope, hang on. Yes, that's it. So basically, this was when we had to move up. What happened was once we got through this, the 57.50 right here, you can see we jumped right up to the 57.84. So even this trade was 35 points. If you just took that and you didn't buy down at the 56.65, which that's pretty much what we did, and I will show you the post that we put in. But basically, what we were looking for was, just this shakeout that one of these support levels are gonna hold, and we were gonna get a decent bounce off of it. Now, what happens on tomorrow? I mean, we'll probably have a pretty good idea tonight. If I was a betting man, I'd say I think we're gonna continue higher just to squeeze the shorts, but. It's tough to say how this market's going to react. I do not believe that the lows are in, but I also do believe that we could see a move that could take the S&P, as high as. Let me take a look. I have it here. I really wouldn't be surprised to see us trading somewhere up between the 59.10, 59.67. And there's a reason to believe that we could get all the way up to the 60.50 level. Now, again, I'm not sure. It all depends on if they decide to try to really squeeze the life out of the bears and take it straight up. Because we've seen those moves when we had big drops, and within 3 days we were back up above the highs. So it's not something that would be uncommon if we saw that. It's just a matter if the bulls have enough confidence to be able to do something like that. So anyway, the lows, we are looking for the low to come in anywhere between the 56.65, 56.35. Now, I wasn't just making those numbers up. It was a reason. Here's the 50-week moving average, and you can see it hit right on it. That's where institutional buyers were waiting, and we got a nice spark up. Now, the reason why I was putting this zone, and I haven't touched these charts. These are exactly where the support zones. I said this is the sell zone, this is the buy zone. So the first, we had the 57.10 was the 200-day moving average on the S&P, and I thought that was going to be a magnet, and there could be buyers that were going to step in, but I said if they take that out and flush it out, what's going to happen is we now have the 50-week moving average that's right below that. So you have everybody that's looking at the 200-day moving average panic selling, and as they're panic selling, institutions are buying at the 50-week moving average, and from there we got a decent bounce off of that, where we went from the 56.63 all the way up to the 57.84. So 120 points, and that's just following just your it really just using a little bit of psychological warfare based on the bulls and the bears and how retail traders think, and they don't really expand their charts out to look into the weekly or the monthly time periods, and they see the 200-day moving average taken out, they see panic and they sell at the lows, and the institutions are buying at the lows, and you want to try to align your trades up with them. So right now, we got that nice bounce. Again, we made it above the 57.50. That was the first target. That alone was almost a 100-point move. But one from there, we hit the moving average, came down, and then busted above it and made it up to the 57.84, which was the secondary target on it. So what happens now? You can see right here on the 5-minute chart, we have some bearish divergences. We're getting into the overbought, but I wouldn't be surprised to see us maybe doing a little bit of backing and filling, maybe down to the 57.40 level. That would make sense. If they start heading down harder, then maybe this is just a short-term low. But one of the reasons why I'm thinking that we do have some type of tradable low, and it may only be for a week. That's the thing. But give the bulls a week to move the price higher. I mean, like I said, they can wipe out a majority of the losses that they just had in a very fast manner. And again, I'm going to keep saying, I do not know if they are going to or not, but it would make sense for this reason. We had fear here, and then we saw fear pull back a little bit, and now it's back up again, and you can see we actually took out these highs right here. So with that, you can see we actually have some bearish divergences. We're getting the big bounce on Friday did take the momentum down into the oversold levels. So seeing a back test maybe up to the 24.87 would not surprise me, and if that was going to happen, then we'd probably see the S&P back down near the 57.40, maybe a little bit lower than that. So that's that part. Let's take a look at the 15-minute chart. And this is, I was showing you guys this potential inverted head and shoulders pattern where I said, we got that little bounce right at that 57.10. I said if the bulls keep it going, I wouldn't be surprised to see a move up to the 58.60. Pull back and then come up, and the target at that one was right around that 60.11, which was this resistance. But once we took out this, these lows here, that pattern was erased, and also we wouldn't have been making that right shoulder. But all I'm doing is moving it over and saying, all right, here's your left shoulder. We came down. Here's your head. If we come up to the 58.60 tomorrow or Tuesday and then pull back, I would, and if we see these levels hold here, anywhere from the 57.66 down to the 57.41, and it holds and then comes back up, now the target is up at the 60.60 level. So that's just basically the way you work this target is from the 56.64 down up to the 50, let's just say 58.62, 56.62, 58.62. So it's 200 points. That brings us up to here. So that's how you measure the pattern on this one. And again, we have a lot to do to even see if this pattern is in play, because we got to go up another 90 points, pull back, and then go up. But this is, I just like kind of seeing how something may be shaping up with it. So this is a possibility. They don't even have to get all the way up here. It doesn't have to be an exact neckline on it. So we could see a move if they do. They get up to the 58.33 and pull back. That's how they can also make the right shoulder. But again, I'm not sure it's going to play out. But we have these bullish divergences. We are overbought on the 15-minute chart here, but we don't have any sell signals. So any little pullback, as long as the bulls are willing to step in and hold support, then it should be bid back up and come there, and that's where we may get some bearish divergences. But if we come up here and came down, that would actually make sense, because we're up here, we'll have bearish divergences. This will be the pullback, and if we look at the 60-minute chart, we're not even into the green level yet. So if we get up to these levels, this is going to start pulling us up here, and then if we end up getting up to, say, the pattern target, if that's what's going to play play out, we're looking at a move to the 78% retracement. But again, we would get it would be choppy, and we'd probably see sell signals just like we saw here. And that would kind of align us with the next move to the downside. And, if that happens, really what I'm looking at, the target zone is going to be the 55.28, which is only 23% retracement, all the way down to this 51.36 or 51.40 level. So this would be the target one. I would anticipate that we would get some type of buyers here, bounce back up, and then from there, again, I'm just talking out in the future. What could play out? We then, it may not come until summertime or whatever, but we get a decent little bounce, and then from there, the ultimate target. We could see a move from a high of the 61.60 and a low down at 4,800, 45.03. And again, that's too far out into the future. I'm just showing you what. If everything does align and it starts, and things and the support levels give way and stuff, these are the downside targets. Now but in between that, we're looking for a bounce, that could take us somewhere up into these levels. So let's go back to the 5-minute chart. So look at this line here, 1133. Let me go to this, and this is what I put in the trading room. I said that at 11:33, there is risk with this trade, but using 310 expiration, which is tomorrow, and using the SPY. I was not going to be using the SPX because I'd be risking, $15,000, $20,000 on that, or a little bit less. And I wanted nothing to do with that. I wanted to say, all right, listen, if everything does work out as I'm watching it right now, then what we want to do is take a look and have some skin in the game. So if we got stopped out of this, let me see where the next one. Okay, so this was the trade right here by five of the March 10 571 calls. 333. So we're talking a little bit over, 1,600. If this thing would have just crashed, we would have lost 1,600. It wouldn't have been anything that would have been, really, really that hurtful to the market to the fund, because we've been doing very well. But this is what I left open. Now, these were our profits from Thursday. I left them open, and basically you can see the fund was at 241. I was able to close these because remember this trade. This is where I had the butterfly trade. So I sold 4 of the 5,700 puts, bought 2 of the 5,650, and then bought 2 of the 5,750. So where this trade starts losing money is if it went below the 5,650. But when it's staying in between these, this is where the bread and butter, where you make all your money, is that if it closes at the 5,700, because this one was really not that expensive at all. You can see it was 2,600 cost, but I sold these for 10,000, and then these were 9,000. So if it closed right here, you're going to make money on that, and you're also going to make it on what you sold. So that's where you make the most money on these. But that's when it closes there. But if we're down, and it's after 11 o'clock, and we're in between here, I was able to close these, and it was a really, really nice trade that we had. I was able to close them for a little bit more than this 3,600. And then what I did was I left this trade on. So I closed all these, and I think it was a little bit more. I had to run out. I had to go get a CAT scan. I was a little dizzy on Thursday. I don't know what happened, but I kind of lost a little bit of hearing in my ear, and they think it may be vertigo. They're not sure. So I had to go for a CAT scan on Friday, so I wasn't able to get the final numbers on this with it, and I didn't feel like just going through all the trades and adding them all up. But it was a little bit more than this that we made, and now we have the position going into Monday that we're already up that 5 SPY calls. We're already up $1,600 on it. So if we do see the S&P say gap up or something, and we make actually, let me do this. So the 1133, this is where I put that where I said to put the trade on, and this is the S&P was trading at 5670. Let me see where the low. 56, about say 83 in that range. So you had about 20 points of stress right here, or even just 10 minutes. And then from there, this trade, it's exploded. And again, we're up 1,600. If we see the bulls try to really just jagger the bears, then we're probably going to see that move come up somewhere into the 58.11. Actually, I would not be surprised to see it come up to, where they get them all the way up to the 58.61. If that happens, we're going to, it's going to be another trade. We're going to be up like $5,000 or $6,000 on it, and it wasn't going to be a whole lot of stress. So this is the possible pattern. Now, if we open up down hard, most likely we're going to just break even on this, and I left $1,600 on the table. But we're up there. I think this is going to be okay. We'll see. If not, it's going to be a very, very minimal haircut, if not any, just because I wouldn't foresee us opening up below the 571 on the spiders, but anything can happen, so we'll have to just wait and see on it. But anyway, moving forward on to tomorrow, again, we're a little bit on the oversold levels, so seeing some backing and filling wouldn't surprise me, but this does look like a bull flag, so I would guess they're going to move higher, but again, I don't know that. I'm not married to that. They may head lower on it. And if they do, then we keep an eye on the 56.35 level. And on the upside, I would not be, jumping. I wouldn't be shorting, but I wouldn't be jumping with new positions at the 58.61 because this is heavy resistance. And I do believe sellers will be waiting. So anyway, I'm really sorry for the long report. I just really wanted to get everything in. Let's see what plays out tomorrow. Actually, tomorrow I'm only going to be in for a little bit. I have to get the MRI now tomorrow. Again, they're just trying to figure out what's going on. Is it vertigo or whatever? But I have to be there at 10:30 in the morning. It's right around the corner. I probably won't be back until like 1:30. So I'll try to see what the trades are, close out whatever it is, and then we'll go from there. But in any case, have a great rest of your weekend, and I'll talk to you guys in the morning.